Hey everyone, welcome back to my channel. Today we're going to talk about something that I think is really important for anyone looking to start investing, and that's how to grow your money over time. I know a lot of you out there might be thinking, I've got $1,000, but I have no idea what to do with it, or how to make it grow into something more substantial. Well, in this video, I'm going to share with you 5 investment strategies that can help you turn that $1,000 into $10,000 in just 2 years. Now, I know that sounds like a pretty ambitious goal, but trust me, it's achievable, and I'm excited to share these strategies with you. So let's get started. First, let's talk about the power of compound interest. This is something that I think a lot of people don't fully understand, but it's really the key to growing your money over time. Essentially, compound interest is when the interest you earn on your investment is reinvested, so that you start earning interest on your interest. It's like a snowball rolling down a hill, gaining size and speed as it goes. Now, I know that might sound a little confusing, but don't worry. I'll give you an example in a minute. The first investment strategy I want to talk about is a high-yield savings account. Now, I know what you're thinking. A savings account isn't really an investment, is it? But hear me out. A high-yield savings account can earn you around 2 to 3% interest per year, which might not sound like a lot, but it's a great place to start, especially if you're new to investing. And the best part is, it's totally risk-free, so you don't have to worry about losing your money. For example, if you put $1,000 into a high-yield savings account earning 2.5% interest, after 2 years, you'll have earned around $50 in interest, bringing your total to $1,050. It's not a huge return, but it's a start, and it's better than just leaving your money in a regular savings account. The second investment strategy I want to talk about is index funds. Now, I know some of you might be thinking, what's an index fund? Essentially, an index fund is a type of investment that tracks a specific stock market index, like the S&P 500. It's a great way to diversify your portfolio, which means you're spreading your money out across a lot of different investments, so that you're not putting all your eggs in one basket. Index funds are also relatively low risk, and they have a history of performing well over the long term. For example, if you invest $1,000 in an index fund that tracks the S&P 500 and it earns an average annual return of 7%, after 2 years, your investment could be worth around $1,450. That's a much better return than you get from a savings account, and it's still relatively low risk. The third investment strategy I want to talk about is dividend investing. Now, this is something that I think a lot of people don't know much about, but it's really interesting. Essentially, dividend investing involves buying stocks in companies that pay out a portion of their profits to shareholders in the form of dividends. It's a great way to earn regular income from your investments, and it can also be a relatively low-risk way to grow your money over time. For example, if you invest $1,000 in a dividend-paying stock, and it pays out an annual dividend of 4%, you'll earn $40 per year in dividend income. That might not sound like a lot, but it's a great way to earn regular income from your investments, and it can also help you grow your money over time. The fourth investment strategy I want to talk about is peer-to-peer lending. Now, this is something that's become really popular in recent years, and it's a great way to earn higher returns on your investments. Essentially, peer-to-peer lending involves lending money to individuals or small businesses in exchange for interest payments. It's a great way to diversify your portfolio, and it can also be a relatively low-risk way to earn higher returns on your investments. For example, if you invest $1,000 in a peer-to-peer lending platform and you earn an average annual return of 7%, after 2 years, your investment could be worth around $1,450. That's a much better return than you get from a savings account, and it's also a great way to help support small businesses and individuals in your community. The fifth and final investment strategy I want to talk about is micro-investing. Now, this is something that's become really popular in recent years, especially among younger investors. Essentially, micro-investing involves investing small amounts of money into a diversified portfolio of stocks, bonds, and other investments. It's a great way to get started with investing, especially if you don't have a lot of money to invest. For example, if you invest $1,000 in a micro-investing platform and you earn an average annual return of 5%, after 2 years, your investment could be worth around $1,105. It's not a huge return, but it's a great way to get started with investing, and it's also a low-risk way to grow your money over time. Now, I know that some of you might be thinking, these all sound like great strategies, but how do I actually turn $1,000 into $10,000 in 2 years? Well, the key is to be consistent and to keep investing regularly. It's also important to be patient and to not get discouraged if your investments don't perform well right away. Remember, investing is a long-term game, and it's all about growing your money over time. One way to do this is to use a strategy called dollar cost averaging, which involves investing a fixed amount of money at regular intervals, regardless of the market's performance. This can help you smooth out the ups and downs of the market, and it can also help you avoid making emotional decisions based on short-term market fluctuations. Another way to turn $1,000 into $10,000 in 2 years is to take advantage of compound interest. As I mentioned earlier, compound interest is when the interest you earn on your investment is reinvested, so that you start earning interest on your interest. This can be a powerful way to grow your money over time, and it's especially effective when you're investing in a tax-advantaged account, like a Roth IRA or a 401(k). For example, if you invest $1,000 in a tax-advantaged account, and you earn an average annual return of 7%, after 2 years, your investment could be worth around $1,450. But if you reinvest the interest you earn, and you continue to invest regularly, you could potentially turn that $1,000 into $10,000 in just 2 years. In conclusion, growing your money over time requires patience, discipline, and a solid investment strategy. It's not always easy, and there will be ups and downs along the way, but if you stick with it and you stay informed, you can achieve your financial goals. Remember, investing is a long-term game, and it's all about growing your money over time. Don't be afraid to take calculated risks, and don't be discouraged if you don't see immediate results. With the right strategy and a little bit of luck, you can turn $1,000 into $10,000 in just 2 years. Thanks for watching, and I'll see you in the next video.